2017 was difficult, as you say. We're very pleased with the results. It's another solid performance from the group, right across the board. Some nice gains in market share, and we wrote the business profitably. We achieved our target hurdle rates, and as you said, in South Africa in particular, difficult environment. So we're very pleased. A good absolute performance and a good relative performance.
Now, Junior Ngulube, you're head of emerging markets for this. Now, one of the big things about these results has been the acquisition of Saham for $1 billion. How difficult was it to negotiate that?
Well, it's a very solid business, and obviously negotiating that kind of price does take time. It's not easy. We paid a fair to full price for the business. And one has to consider the scarcity factor as well, because there's only one Saham. There isn't another group with that kind of footprint on the continent today.
I mean, what are the shareholders going to say, you think? I mean, it's quite a lot of money,
yes,
but in exchange you get into, what is it, 33 countries across Africa now?
It now puts us in 33 countries across the continent and positions us actually as the go-to player, firstly for multinationals who are doing business on the continent, for intermediaries who work with the multinationals, but also interestingly for other international insurers who are not present on the continent but have clients on the continent.
And just paint us a picture of just a decade ago, how many countries was Sanlam into and compared to now?
5 countries at the beginning with the acquisition of African Life. That was the start. In 2016, we were in 19 countries. Saham was also in 19 countries when we started talking to them. With the overlap in 4 countries, it puts us now in this solid position.
We're going to talk a little bit more about more acquisitions you may have in mind. But Ian, just to go back to you, the general results. The weather has been very unkind to Sanlam this year. Just how bad was it, and what did you have to pay out on?
Well, the first big event was one event sort of in the Western Cape, which actually ran through to Plettenberg Bay and Knysna. You might remember that. It was in June, just before the half-year results for Santam. So the industry took a knock of 3 billion, and obviously Santam, with a big market share, ended up with over 800 million of claims on that event. Then there was another big event in October, which affected in Gauteng and in KwaZulu-Natal. You might remember, you saw the pictures of all the cars floating around and the houses underwater.
Yeah.
That was 1.8 billion for the industry and about 500 for Santam. Now, Santam takes reinsurance protection, so the whole thing has cost about 250. So Santam achieved a 6% underwriting margin, which is very acceptable overall, but it would have been north of 7.5% if had we not had these experiences. But you know, that's what insurance is about. You know, that's why we're there. No, you just pay the claims. Yeah. And it's an opportunity to, you know, I mean, people they buy policies with us for peace of mind. So it's a wonderful opportunity for us to go to the clients and say, that's why you have insurance. And just make sure that you've got insurance at the correct levels, and make sure you have the insurance with the right company. And that's the game. And we've done it for 100 years, so that's why we do it.
We're going to talk more about acquisitions in a second. Yeah. One last quick question for you. You say dividends up 8.2% on 2016. How much could it be if it hadn't been for these acts of God we've just talked about?
You know, but by the time it gets to the Sanlam level, it probably costs 0.3% or something. So it would have been 8.5%, maybe 9%, but you know, in fact, it would have been less, probably about 8.5%. So the shareholders suffered a little bit, but the point is that's our business.
Yeah.
That's why we're there. That's you know, we provide the peace of mind for people, and you know, the biggest insurer with 25% market share, people have confidence, and in those territories that we have big market shares. So you'll expect to get hurt.
Good. Okay, Mr. Ngulube, just back to the acquisitions front. You made a big one this year, $1 billion on Saham. Well, the remainder, was it 53%, the remainder of the business. Yeah. What other acquisitions are you looking for in Africa now?
Well, if you look at our footprint right now, we're really covering most of the countries that one would be interested in. We still have 1 or 2 that we're very keen on, and this is Ethiopia. We know regulations at the moment don't allow foreign direct investment, but we believe with time this is going to change. And in the interim, we are working with a partner on the ground to develop a relationship with them for when the market opens up.
And I understand, though, aside from the regulations, that the economy is cooking in Ethiopia at the moment. What are you hearing?
Ethiopia is doing amazing things. I mean, if you look at infrastructure, they are pretty much self-sufficient in electricity. They are now probably going to be exporting electricity when they complete this Renaissance Dam, the big one. It also sets them up to become a manufacturing center, and they've started doing this on the continent, now that they've got reliable electricity. Rail, they've done a lot of rail of late. So all the right things are happening in the country, hence our interest.
Okay, back to you, Ian. Healthy results by any measure. What do you think is going to be your biggest problem, your biggest challenge in the year coming ahead?
I think to bed down the balance of the Saham acquisition, because as you've said, it's very substantial, and to really deliver on that footprint and the opportunity. You know, as Junior has indicated, we've positioned ourselves as the go-to market for corporates investing on the continent, and we have to deliver that. The volumes are coming through now, but they can come through at a higher level. I think that's probably the biggest challenge. As far as South Africa is concerned, I mean, I think business confidence and confidence of consumers will probably rise. So come the second half of the year, I think there'll be better level of confidence amongst our clients to invest. You will have seen this year in 2017's results, the single premium volumes were down for the industry and also for Sanlam, because people were sort of concerned about the situation, and rightly so. People don't invest, and they don't have confidence to invest locally in equities or internationally through the various structures that we provide our clients. I think that situation will get better. And I think we're just altogether in a better place than we were you know, coming up towards the end of last year. So I think we can be thankful, and I think in time the environment will look better in South Africa. Also on the continent, you know, the oil price stabilizing around the $60 mark makes a big difference.
Absolutely.
For you know, a number of our important territories like Nigeria, Angola, and the copper. The copper makes a difference.
Well, looking a bit further north, I mean, you've got vast business interests in Britain. How much do you fear this Brexit thing? Everyone's talking, saying the economy is going to take a dip. Okay, how are you reading it?
I think they're going to struggle in the process. I think they've got themselves into something they didn't anticipate. The big issue for us is, will the UK remain an acceptable centre for financial services? Because that's really why we're there. We're there to support our businesses in South Africa and Africa. Our international, institutional and our retail clients need diversification, so we have to have that ability. So as long as the financial sector stays based in London, we'll be fine. But as you will know, a number of the big financial groups are looking at contingency plans. If the worst came to the worst and London became unacceptable as a financial centre, which I doubt, that's not our base case, we could always go across the corridor to Ireland, because we have operations in Ireland, and we used to have fairly substantial operations in Ireland 10, 15 years ago, and we relocated largely most of that activity to London. Now we could always move it back. It's my hometown, so it wouldn't not the worst place to go. But our base case is that, you know, as far as financial services is concerned, that the British will be able to negotiate an acceptable outcome.